Good morning and welcome to the trade setup right here on BloombergQuint Live. It's Friday the 13th. Usually that spells an uncertain, volatile time, if I can use that term. It's predicted, it's in parlance, it's used to be bad, but let's wait and watch if it turns out that way. The cues aren't set for it to be really bad, but maybe a bit soft in the session. So let's wait and watch. So US stocks were down. Coronavirus cases across the Western world continue to rise at an alarming rate, I must say. In fact, hospitalizations too. I think I read the New York update or some other city in the Western Hemisphere, in the European region update, that hospitalizations have risen so much that they have now warned people, please don't get sick, and therefore they'll continue with the curbs. In the US, Nancy Pelosi and Senate Minority Leader Chuck Schumer have called for new coronavirus relief bill. So that kind of gives a bit of a leg up to the market. Don't quite know how this will shape up. For now, the futures are in the green and marginally at that, and maybe that could be construed as a small positive, and which is why now what Asia and SGX are doing at the current point of time may not necessarily be the mood of the market. Eventually, you have to bear that in mind, but we'll take it an hour as it comes. So for now, Asia's a bit soft in trade. HSI down about 0.5% or thereabouts, and not surprising at all, considering what's happening in the Western Hemisphere and on the coronavirus cases, that is. And then India will, SGX Nifty will come up on your screen. Mind you, infections in Delhi, etc., are rising. So this whole conversation of a second wave, one just hopes it's not true in India. It's not true anywhere, of course, but not true in India as well. But purely because we're talking about the Indian indices perspective, one just hopes that things don't get too bad. But for now, it looks like we'll start off about 0.8% lower. Now, viewers, keep in mind, let's get the trade set up on the screen. And just keep in mind, the last 2 days, we've been talking about those RSI indicators, momentum indicators, which have spoken about how there is a very high probability that we may come off. If you would remember, yesterday and day before especially, we spoke about how the RSI indicators were above 70. In the case of the bank Nifty, were above 80, and therefore that was usually when the market started to correct. Now, we may be entering a small corrective phase led by the technical indicators. And in fact, I do believe that the overbought stance in the banking space, 21% since the start of November, is not a joke. You had a very stiff rally. You should be prepared for a small bit of a pullback. Now, I'm not suggesting it will happen, but it could very well happen. And people should be surprised by that. And therefore, the mid-cap banking stocks in particular could be a bit corrective. So please be mindful of that. You might still have some money coming in for a Kotak, HDFC, etc., due to various factors. In Kotak's case, MSCI led, etc., etc. But mid-cap banking could well have a tough time. So just be mindful of that. Real estate and specialty chemical stocks seem the best short-term trading bet. So you have to be mindful of those stocks when you're taking up some bottom-up ideas or stock picking. Now, also keep in mind that the one small risk-on factor could well be CBOE VIX, which is kind of dipped a little bit, and you might well see that proving to be a bit of a leg up. In today's session, it's up and about 7.9%, but by and large has been coming off. Now, if indeed, after dipping for a number of days, if CBOE VIX were to move up and volatility rises, then that might be a negative thing too. It's a bit of a chicken and an egg situation, viewers. Keep that in mind, that whether volatility leads to the correction or the correction leads to increased volatility. But for now, with this 7% uptick, we might well have a battle on our hands. And therefore, I think being stock specific might well be prudent. What are the stocks for today's session? Well, there are 5 or 6 that I think are pointing towards good cues. You don't quite know with the market, the mood that it is in, what will happen. But Grasim could well turn out to be the stock of the day. And a couple of reasons. One, of course, the results came in the numbers compared to estimates, way better, way better. Revenues not so, but on the margins front, because of lower other expenses, lower power costs, employment expenses, etc., coming off, the margins went up from 8% to 11%. Consequently, the profit numbers at 360 crores, the estimates were 177. That tells you the extent with which Grasim has beaten the estimates. And that's not all. I think what's also positive from from the commentary that came in yesterday was this announcement, right? That they've announced the sale of its urea business to Indorama, and the urea business will be sold for a cash consideration of 2650 crores. It's contributed to, I think, 3% of its revenues or thereabouts, so nothing too dramatic, but it gives them the much needed money for being able to incur any of the capex expansion plans, etc. So I have this Morgan Stanley note with me, and viewers, I'll just read it out. Of course, they're saying that their target price for Grasim is about 935, and therefore the upsides to the price target about 13% and they believe that Grasim is delivered on all counts. So do watch out for Grasim. It could well be the one interesting name to monitor in the session today. That aside, I think Eicher Motors, the numbers were good. What stood out for me, reading upon all the reports, was these 3 or 4 things. The order backlog is strong at about 125,000 units. Production is going to be higher on a sustainable basis. I think they mentioned a number of 70,000 units or thereabouts, but the production is going to be higher, and they believe on a sustainable basis. They've expanded the network by 25 regular stores, 133 studio stores. There were also 6 international stores that are open. And when I read articles, Royal Enfield is starting to make a mark in the Western markets. People are saying that cost-effective big bike that is coming in from Eicher Motors. A couple of auto portals have reviewed Royal Enfield bikes and given them a thumbs up. So it could be interesting to see what Eicher Motors does in the near term and in the session today. Phoenix Mills could have a bit of a dull day today. The numbers not that great. You could question whether it's priced in or not, but I'm just purely pointing to what the numbers have thrown up, and doesn't look good. 214 crores, the estimates were 242. EBITDA is 91 crores, 124 crores was the estimate. Net loss, now let's stick to that graph. Net loss was at 35 crores. The estimates were 1.7 crores. So not a great quarter. The only thing is, because we are all opening up, in India at least, it should augur well for Phoenix Mills, particularly the mall operators, because India has very little places to go for entertainment aside of malls, to be honest, at least in the urban cities. And therefore, you could maybe say that these numbers were priced in. But for today's session, maybe there could be a corrective move. 2 or 3 other names that all of us should keep an eye out for, because the bulk deals and block deals in them are very interesting. Firstly, Indiabulls Real Estate. Now, the stock was already up 13-14%, but Rare Enterprises has acquired 50 lakh shares, which is about 1.1% at 57 rupees per share, or 57.73. This is Rakesh Jhunjhunwala's firm, and that name evokes or gets in reactions. So therefore, watch out for Indiabulls Real Estate. Even though it went up 13%, could well do well. Jasdal is the other one, wherein the promoter entity has acquired about 3.3 lakh shares, if I'm not wrong. Yes, 3.3 lakh shares at about 608.87. Do watch out for this one. Last but not the least, dairy companies are in the back burner of late. Not too many people go out and buy them. And Bharat Dairy is anyways involved in a lot of other issues. But Hudson Agro has seen 2 very interesting buying yesterday. So promoter Chandra Mogan Satyan acquired 1.72 lakh shares, and Malabar Select Fund, which anyways has stake in Hudson Agro, this is Sumit Nagar run. They acquired additional 1.4 lakh shares at 825. So you're seeing a very smart money manager and the promoter buying into Hudson Agro. I dare say, watch out for this one. CLSA is upgraded Jubilant Foodworks, so that's one more name that you should watch out for. Lastly, what stood out for me is that, quite contrary to what the popular belief has been that growth stocks are outperforming, there's this wonderful chart on the Bloomberg terminal which shows how the value gauge is on track to beat growth for the 3rd consecutive month. Imagine, in a coronavirus year, we already have had value starting to outpace growth stocks 3 consecutive months. Let's see if this becomes a pattern for the rest of the next 12 to 15 months as well, or no. Anyways, have a profitable day ahead. The markets are looking soft. Futures are looking okay. India may be slightly different than the rest of the world. Please keep that in mind. Thanks so much for tuning in.